We are here, we are here, we are here on this amazing day. Everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back to business. Alright guys, today's date is January 28, 2021. The time now is 4:37 Eastern PM. So we're checking out USD CAD. That will be the United States dollar versus the Canadian dollar. So let's take a look at the markups to see what's going on in the market on the monthly time frame for CAD. Alright, let's take a look, everyone. Okay, so the market started off here back in June of 93. Price pushed up. From there, price has consolidated. From there, we had another push up to the top. And that looked like maybe the second level higher highs somewhere here. From there, the price came down. It hit an area of support. It touched the support and it broke back up. Once the market broke back up, it reached previous areas of resistance, which would be areas of higher highs. And this is the highest it's been back in February of 2002. So it hasn't been any other previous higher high days that the market has been in since June of 2002. From there, the market pushed down. It went all the way back to the bottom. It dropped drastically. One push down, two push down, three push down, four push downs. Ran into a major area of support, which would be here. From there, the market pushed back up, created new levels of highs, which would be right here. So it put itself into a resistance, and we have support. From there, the market pushed up to support, came back down to resistance. So now the market's working on pushing up again, as we can see. So it pushed up this high, then after that the market pushed up higher, which we can see that it reached previous areas of resistance, which be in this area here. From then the market pushed up and broke through the resistance to retest the resistance, to bounce around the resistance and the support over and over again. So this area will be where price action is. Price action area is here. Price action here, which is the candle, and this area will be the price action area of, okay, what is price going to do? Is it trying to break down? It's trying to break up? It's doing sideways. And this space here is already in a consolidation, so we just got to figure out if the market is going to continue to be in that consolidation, or it's going to break up and break out. So what we're going to do is going to mark up a little bit. Let's grab our trend line. So we see that the overall trend, if we grab it from the bottom here, will be some type of uptrend. From there we can find out, okay, you know what, we have to create our support and resistance lines. So we can see an area of here of some type of resistance. We see an area here of some type of support. And we can put another area, if it breaks through here, we can see that the market is going to go further down. So we can see that the market is ranging within this space here. So we got to see if the market either is going to break down and touch our trend line and respect our trend line and work its way up to go further up, or is the market probably going to bounce up and down this consolidation, hit our support, bounce right off our support, go ahead right back to resistance and shoot up higher. So there's three ways this could go. So let's take a look at what probably can happen, what may not happen. So if we take a look at Let's go down to the time frame. Let's go on the weekly and see what the market is doing. So we can see that the market is respecting our SR line here. So like it's going up. Let's go down to time frame and let's see if we can see more pushes to the top. So what we can see on the daily time frame, we can see that the market is trying to break up and out of this area here to break up to the upside. So once we are able to receive confirmation that price is breaking through this area here and is headed up to the top, we can just head to stay on our daily time frame. If you want to, we can add another trend line heading up this way, because we do know that the overall trend direction is up. So if we would get in this trade and we see that the overall direction is up and we see confirmation patterns that this market is turning around and going up, then we can find our entry and we'll be able to take that up to the next area of pips. That will give us a total of 1,215 pips over time. And if we had to set a stop loss, say about 3 something, let's go to our 4-hour time frame. So over time, the market eventually will head up to the top of this TP area. If you want to find an area where it can touch earlier, just to get in your trade and get out your trade, you can put the next area somewhere here. So what we can see is that if we look closer, we can draw our SR line to say, okay, you know what, if market breaks here, it's going to head up to this area here. And how many pips that will give us? That will give us an estimate of about 328 pips over time. And that's an amazing trade, everyone. Alright guys, let's take a quick look over on, let's pull up our Forex pattern cheat sheet. Let's go to images. Let's break down a few patterns that we normally see in the market. Let's zoom into this area here. Alright guys, let's check out the bullish engulfing patterns, the bullish harami patterns in the tweezers bottoms. Okay, let's see what these patterns are all about. So with the bullish engulfing pattern, so when we see this engulfing pattern here is when the market is coming down from somewhere, and then we get the fourth candle that forms, and then we can see it's a green one, and the next one it comes over, and if it engulfs that previous candle, sometimes it may engulf, as we can see, it engulf one candle, but sometimes it engulfs 2 candles or 3. If you see it engulfs 1, 2, or 3 candles, we're going to be looking for a trade to take that to the upside. So the engulfing is where the market is coming down. We'll look for entry for the pattern as engulfing, which we'll see here, and to get in our trade to take it all the way up to our TP. Just take a look at our bullish harami. So the bullish harami, though, there's a similar concept. So the market is coming down from somewhere, it created a strong green candle, but then the next candle coming is it's you can't really tell what it is. It's not strong, it's not weak, it's just a body of a candle, but it doesn't engulf the other one. It doesn't look dominant the other one at all. So what we can do is wait for the second candle to form over the previous bullish candle to take entry and take it up for the top to TP. Let's take a look at the twister bottom. So twister bottom is the same direction. The market's coming down from somewhere. Once it gets to the bottom, it shows the two twisted bottoms. Sometimes it's not two, sometimes it's one tweezer bottom. But this time we see two tweezer bottoms. But the tweezer bottoms, all the tweezer bottoms are is a doji candle. If you don't know what a doji candle is, a doji candle is just an indecisive candle. It's a candle that don't know what it's going to do. You don't know if the market's going to go up. You don't know if it's going to go down. So when you see a tweezer bottom, tweezer top, doji candle, that just shows us that we need to wait for confirmation so we don't take entry at that tweezer bottom or tweezer top or doji. We just wait for the next candle to form to close out above or below the previous candle to take the entry. And that would be tweezers, and that would be the tweezer bottom. Okay guys, thank you for watching. This is Cam.